Now, in a world of inflationary pressures, market volatility and shifting rates, cryptocurrency increasingly being talked about as an essential alternative for diversification. For Insights, Joe Shew from the Crypto Consulting Institute joins me, a familiar face to ausbiz viewers, Joe. Let's start with the big picture. I mean, we keep seeing these records, particularly for Bitcoin. What's driving it?
Yeah, well, I think there's many things that are driving the price appreciation and continued price appreciation for Bitcoin. I guess if we look at the global macro environment with debt levels continuing to surpass the $37 trillion level, there's people that are starting to see the concern, the fragments, the fractions, and they're wanting to start looking at different assets. So they go to gold. Bitcoin has obviously seen the incredible appreciation. It's up 77.5% year-on-year average growth in the last 5 years. So I think the numbers speak the truth. But outside of that, there's many other factors that are driving it. Interest rates will start to cut in the near future, as soon as this month in the US, and that will lead to more drive, more liquidity, the global M2 expansion, etc.
You and I have talked many times about crypto skeptics suddenly changing their tune. We talk about big name investors, but for those new to this space, what would you say, what makes cryptocurrency a really, I guess, essential alternative?
Results is the main thing. So as an investor, if you look across different assets and you say, okay, I'm interested in investing in something, why are you interested? It's performance. So if Bitcoin produces a 77.5% performance year on year over the last 5 years, and the next major asset class is the S&P 500 at 18%, and then gold's at 13% and property's at 5.6%, then it starts leading to the question, where is my money best? So I think that's really what's opening up the need or the desire for people to be investing in this asset class. But then there's the debasement and all the other things that are leading to the drive and the momentum behind it.
What about volatility and people that are scared by the volatility in crypto?
Yeah, so over the last 260 days, Bitcoin's volatility has been 2.2x of gold. So the volatility is actually diminishing as more investors step in and the market cap builds and grows, because it takes more money to move the market cap. So my argument back to that would be two things. Number one, volatility is where money is made. If there's no volatility, obviously there's no price appreciation. The second thing is it's starting to be viewed differently because of the market cap size, so the volatility is actually diminishing.
Let's talk about how you at the Crypto Consulting Institute help rookie investors, I guess, really avoid some of these rookie mistakes. You know, what are they and how do you help people?
Yeah, there's so many mistakes that people go through. I even think back to my own journey when I first began. It's following the wrong people, listening to the wrong information, making decisions based on what other people tell you, investing at the wrong time because you're using emotions, not having the confidence because you don't know how to store the crypto in the most effective way. So I think there's so many mistakes that are easy to sidestep, and that's through quality education. What we focus on is empowering people. So we give them the knowledge, the data, the insights. Where do you actually go and build these frameworks based on your own risk tolerance, based on your own strategies that you should have based on where you're at on your journey and where you want to go. So I think for me, the core of this is empowering and helping people so they can have that confidence and the certainty, and this is my decision based on what's right for me, not what someone on YouTube or someone else is telling them. Analysts say Bitcoin's going to X. So what does the data actually say behind that?
So tell us a little bit about your courses. You've got VIP immersion and elite mastermind programs.
Yeah, we have a few different programs. So the VIP immersion is best for someone who's either just starting out in crypto, or maybe they've already been in the market a while, but they're not getting the level of results that they truly desire. And that is to take them through our 5-pillar program, which is really everything from investment psychology, understand how to store the assets in the best way, different ways to transact with confidence, into strategies, fundamental analysis, but there's so many other things around it. But you have taxation partners and different partners where you get discounts, but more so the community. And it's led by a team of 71 years combined crypto experience now, which is after a new hire the other day.
Yeah.
The mastermind is the next level. And that's for an elite investor. Most of the investors in there are $1 million investors now in crypto who have been through the VIP program and want to really take that next step.
Okay, so with so much volatility, what is your advice for those trying to manage risk and I guess position sizing as well?
I think it's like anything. If you understand what you're doing, then you understand what to do when the market goes through changes, and you understand what's right for you and your own profile. So there's no one size fits all of, okay, the market's come down and you should manage your risk here, because someone might have a decade vision. They might not be a short-term trader, or that might be a percentage of their portfolio. So it's education. If you want to master any arena, what do? You get informed rather than gamble and guess.
So we've seen, as I mentioned, some skeptics really turn around. BlackRock saying 1% to 2% should be in crypto. Tell us about, I guess, how top asset managers are viewing this space now.
Well, BlackRock, by Larry Fink, who you just mentioned, they hold 3.6% of Bitcoin's supply through their BlackRock ETF.
Yeah.
Ray Dalio has mentioned 15% allocated to Bitcoin and gold. Other asset managers, a $300 billion asset manager, Rick, mentioned 10% conservative, 25% moderate, and 40% on the aggressive end. So I think the writing's on the wall, but the proof is in what they're actually doing. That they are purchasing it, and that is very clear in their own funds.
For those that might be a little bit nervous, and we've heard these horror stories of people having wallets and then they've lost them or they've lost the hard drive. There's so many other ways now, right? So what is the preferred allocation? Is it ETFs, or how do you sort of see the best allocation to crypto?
Yeah, with an ETF, you're paying someone to manage that for you. So personally, I would always prefer to own my own money.
Yeah.
And it's the first time in history that we've been given the opportunity where the money is ours and we're independent. So I would love for people to have the confidence and certainty, and that's what we teach, to say, okay, I own this asset, I have full secure and custody of it, rather than paying a service to manage it for you and paying a fee for that. So I see there's different paths. There's never one size fits all, and it depends on where someone's at and what they want to do. But I think the best way is self-custody. And there is a way to improve your security, like multi-sig is one thing that we recommend to our customers, and we have partnerships around that.
Okay. Now, what's next? We've seen DeFi, NFTs. What are you watching out for?
Where traditional society, traditional financial realms interact with crypto in a seamless way, where people don't know whether they're using crypto or not. When there's that full integration, that for me is where there's the next level, where the mass market don't actually realize they're using crypto. So I think DeFi is a logical step for major financial institutions, because it's what they're doing anyway. It's just a different arena, money in the bank, interest, and they can get liquid and leverage that. And it's very similar to the crypto realms. That's why it makes sense and why institutions are considering that route. But I think there's other things like JP Morgan using Bitcoin ETFs and Ethereum ETFs as collateral. So loans I see as a major area as well, and leveraging that. If I own 1,000 Bitcoin and that's locked up, but I want to go and buy property, I don't want to sell my Bitcoin and realize tax. So I can now lend that out and then go and realize liquidity to purchase or reinvest or other areas. So I think the traditional financial banks, custody solutions, loans are huge, are bigger than what people realize.
What do you think is going to happen at the end of the RBA's 6-month investigation into whether or not we should be using cryptocurrencies as a store?
It's fascinating, because the whole project that they're doing is kind of completely against what crypto is supposed to be.
Okay.
It's more intrusive and targeting people's privacy, where the US signed an anti-CBDC bill. So I'm actually quite against what the Aussie government are doing, and I just think it's ignorance, really, to be honest. But
yeah.
I think it's positive, because it puts a light on that they're interested in it and they're taking action steps towards it. But I do think the reality of what they're trying to do is very intrusive.
Okay, let's talk about people that have been burnt, the pump and dump setups. Have you ever had a client have that happen to them, and how did you navigate them getting out of that?
Yeah, of course. Like we do get people check in, and what we teach people is how to avoid these things naturally. But sometimes people still want to learn by their own mistakes, unfortunately. So we are always there to support people in anything that they do. We show up every single week with live sessions trying to educate people away from doing and making all the mistakes that we know people have or we've done ourselves over the years. So I think that it's just showing up and being present all the time and coming with a clear message, which is the same and it's consistent and it's reliable, but really reeling people away from all this speculative stuff that continues to underperform major assets like Bitcoin and Ethereum.
If someone was just new to the space, I mean, obviously you're at a very elevated, intelligent level, but what steps would you say somebody should be looking at for a safe, smart entry position?
Two things. Number one, if someone doesn't really want to learn, they don't want to take the time that this is too much for me, the best strategy that anyone could ever do is dollar cost average. Buy the same amount of Bitcoin every single day or every Monday morning and set and forget and don't look at it for another 10 years. The value of Bitcoin continues to appreciate year on year, and it has done for over a decade now. So that is the smartest low touch strategy. But if they really want to advance, then they get educated. It's very simple as far as I see it. Why wouldn't someone want to learn to really master the highest performing asset class in history? It doesn't, no other asset comes close to the performance of just Bitcoin. And there's obviously thousands or millions of different cryptos that are starting to outperform Bitcoin as well. So
all right, we've got some questions for you from the audience.
Yes, fire away.
Jude says, is crypto too risky for someone close to retirement, or are there any crypto products that could pay income?
There's no one size fits all, as I've said earlier. I will give a live example of a guy, Barry, who was he was a retired builder. He was 73 years old when he started our VIP program. He had $170,000 in his retirement, in his super. And he said, that's not enough for me to survive. So he decided to invest that, which is obviously everyone's got a different risk profile, but he invested that into Bitcoin.
He invested all of it?
He invested all of it into Bitcoin. And again, that's different paths for different people. He turned it into $1.3 million.
Oh, wow, Barry, good on you.
So now, and that's it's a guy who's a builder.
Yes.
Like an ex-builder. It's not someone who's a financial, like, whiz or anything. It's really, it's different, but I think everyone should have some form of allocation to Bitcoin because of the proof is in the data.
This kind of comes back to one of my questions, but I'll ask it anyway. Arav asks, if more ETFs are coming, why wouldn't I just buy those instead of holding the asset directly?
It comes to the private ownership, I think. If you can fully control and maintain and say, this is my asset and I have full custody of that, rather than I'm paying someone to have custody of that asset for me, it's just, to me, it's that privacy, it's that confidence and certainty behind it. And it's very easy to do once you understand how.
And Rick asks, if it's so volatile, should I just wait for a dip to buy?
I mean, look at the performance. It goes in one direction, and the dips are dips. But to me, it's an immature approach to wait for dips. I think a lot of people are waiting for the market to come down, and it doesn't. And the floor price for Bitcoin will continue to appreciate higher and higher. So I think the main concern is that people just wait for the opportune moment. And I literally did a post on this the other day. I said, everyone's waiting for downside price movements. They've got these lower targets because all of a sudden the market's dipped a little bit and it's unrealistic. And I bought really hard last night and Ethereum went up 6%, over 6% in 24 hours. So I think it's, unrealistic. I think it's a variety of strategies. It's constant entry with DCA, and then you build in bigger positions where there's clear opportunities. But where is the dip? And that's what we help people to understand based on data.
Are you preferring Ethereum?
Right now, yeah, sure. Ethereum's up, I think it's 93% over, I can't remember the time frame, against Bitcoin. So I'm not necessarily preferring it, but I've been allocating away from Bitcoin to Ethereum because it's outperforming.